Hey guys, hello, welcome to another edition of the Crypto Live with Alex, featured by Trading Analysis. As usual, we are going to see a little bit of a macro outlook, looking the yields in US and in Europe, and also some of the commodity sector, just to see the overall environment. We can also look a couple of charts from the stock markets, and then, of course, we will switch to cryptos. Please, if you want to leave some comments or some cryptos that we would like to see afterwards, so you can leave it in the chat box. And also, we will try to look them after the main presentation. So let's start. Generally, I will just underline the thesis that we have been looking for the last even couple of months. Technically starting to unfold, the yields are moving lower, and as well as a couple of major commodities. So we are seeing a little bit of this demand destruction that was basically a Fed narrative for moving inflation lower. Of course, that will be seen in the data in the next couple of months. So we will see what will be the next either narrative or moves from Fed in that respect. So let's start. Let's go and look what's going on the US 10-year yields. Of course, I will enlarge this chart that you can look. We are seeing a move lower from the 3 almost 5%. We moved down to 2.7, and we are starting to make some consolidation here. I'm still not clear if this is still a finished move on the upside, but in any case, I will not consider this as still a five-way move. I need a little bit more downside to consider this a full impulsive move to the downside, where I can actually lock up this fifth wave on the upside, and then consider this to some type of a longer consolidation further. I don't think this is the end of the rates move on the upside. I think this is just a pause, which will take a couple of months for sure if we can anchor this wave 5 here or a little bit higher. But I think pretty much soon, maybe even after the next Fed meeting on 27th of July, we will start to move lower and basically form some type of either a longer correction or some type of a triangulation. So corrective waves can take different forms. There is numerous variations how this corrective move can unfold. We cannot know that in advance, but we can as well recognize in some time when we have a couple of parts of this correction, how this correction should like, and maybe where the potential lows should be. So if we look the higher time frames, we have emphasized that we might count now almost complete five waves on the upside, and also the RSI is showing some type of a divergence and higher highs in line with these highs marked on this chart. Weekly RSI are pretty kind of a nice thing to look, because you can see where we are. Wherever you see the pretty higher RSI on this chart, you will see that after some time we have broken a bit lower. But in this case, since we were in deflationary environment, every high was actually sellable. Although, as I said, I think this high will just be and make a temporary pause, potentially down to 2 or even 2.5%, from where I think we're going to have at least one leg higher. So how long and how much this leg will go on the upside, we will see when we actually identify the correction. But the overall thesis that we are going to see soon highs in rates are very well in line with what we are saying here. We just need to anchor this wave 5. So maybe even from here or in the next couple of weeks, I think we will see a little bit more stronger move down in rates, starting to form this consolidation, which we have been actually talking about for the last couple of months. In Europe, it's the same situation. yields on 10-year bond is moving lower. We are now at some support levels. We can also go in some type of an ABC for this wave 4. Obviously, technically, if you have some technical backgrounds, even if you look from the perspective just of the usual technicals without the Elliott Wave, you can see that 40 years channel on the downside has been broken, which has been acting as a resistance, now acts as a support. So if we include also some of the Elliott work, we can actually identify this as a very sharp move on the upside, which we usually ascribe by its character as a third of a third, which means that we are in the midst of making of the first impulsive move in this basically a raking cycle or a hiking cycle. From the ECB, they're going to start to hike rates, although the situation in Europe is much worse than in US. There is a lot of things that are going on in regards of gas and oil, and prices are soaring in Germany, Spain. Latest Spain figures was around 10.6 in inflation, and the Fed is, sorry, the ECB is behind the curve because they still didn't even move the rates on the upside. So I think they're going to start to move rates either in August or September or on the next meeting, but the formation, technical formation of this is going to be a wave 4 up in a wave 5 and then another larger degree, wave 4 and 5. So we're going to stay in pretty long time in some type of up and down consolidation. As you can see here, after we're going to spike a little bit more on the upside, and then as you can see, clearly the cycle is not the same in the US and in the Europe, and afterwards we can expect a longer or a bigger consolidation lower, but we are talking months ahead. So let's focus on this. We do think this is an impulsive event on the upside, and we think that the rates in Europe on this 10-year German bond, which are kind of a benchmark, will continue to go higher, although in a range until we break that range just temporarily to actually pinpoint this wave 5 on the upside. On the dollar index, we are continuing higher in line with our observations. We are moving in a wave 5 on the upside. Will this wave 5 have a little bit more correction, and this will actually act as some type of a flat in a wave 4 and then continue higher? We still don't see any signs of weakness. Euro dollar is very close to parity. So if this dollar index continue to roar higher, some of the levels which are derived from some of the fib ratios that we usually use are marked around the levels of 110 and 113. So this will be the levels to watch. There is also a parallel channel which can act as a resistance, although this is a secondary thing that we look. There is also a previous highs which are around 121. I don't think that dollar index will go higher. I will expect also potential even from here some type of potential weakness, but we don't see that yet for now. So I will allow a certain range in a dollar index from 108 to 112, 13, from where I think we're going to start sharply moving lower in some type of a corrective action, price action lasting even a year or year and a half down to this 92 levels. Depends how this correction actually unfolds. So if we count this as a 5-way move, even if you count this correctively as an ABC and you count this as an X, this will be a wave A, down in B, up in C. So in either cases, we will see a relatively larger corrective pullback in dollar, either to 95 or 90 in the next downward cycle. When this cycle is going to start, I think it is the matter, I think, of weeks. So I do see a range, a possible range of targets on the upside. Definitely, I don't think we're going to go to 120. I think this is going to be a little bit lower between 110 and 112, from where we're going to start to see an impulsive reversal to the downside, which will actually mean that the larger correction has started. Also, if we inspect the RSI study, we are seeing some type of also higher RSI reading on these weekly levels. If you compare this to previous highs, you can see that we are trading around 81. With a little bit of a divergence, which usually marks a possible weakening of a trend, we can climb a little bit more upside. As I said, this is my range, so I will look for signs for a reversal in the next couple of weeks, maybe even until September, because usually summer, especially now after COVID, many traders will go off the desk to deserved vacation, so the liquidity will drop, and the trading might go a little bit more even sideways in August. So maybe even from beginning of September we can see this reversal. But anyhow, I don't think there is much of a left in a dollar gas tank on the upside, especially if I look some commodity currencies which I track, which I think are going to be on a very attractive levels pretty soon. If we switch to the Thomson Reuters CRB index, we have been looking for the wave 5, which is now completely in a full force on the impulsive move on the downside. We were looking the levels between 306 and actually 380. As you can see, we came in a little bit of a middle of it, of these two Fibonacci ratios. Clearly a 5-way move on the upside is very visible. We have pinpoint potential targets and a weighted reversal, which is happening now. Many commodities on this front are moving lower. For now, this move down is looking pretty much impulsive. If this is some type of an ABC correction, possibly, but anyhow, I will look for some support levels reached after a couple of months of this correction in the commodity sector. So 5 waves up are almost 80% probability done. We are moving down impulsively, which will also give us a pause in expensive commodity prices, and it might bring these inflationary figures lower in the next couple of months. So we will see if that will be sustainable on the longer term basis, which means next couple of years. If we switch also to oil, we are still trading within the range that we were looking. I was looking for a potential triangle. On the longer term basis, I definitely don't have a reason to give up from my overall outlook that the oil in the next couple of years will go higher. So I do consider this on the longer time frames to be just a corrective pullback. And I still don't see a 5-wave sequence development on the upside, and especially we didn't trade above the 149 2007 or 2008 highs. That was 2008, before the great financial crisis. So we all know problems with oil. Russia, now Western countries wants to cap the price of the oil due to these inflationary pressures. Russians are selling oil via a couple of different countries, also to China and Middle East, and also Eastern countries are surrounding China. So the markets and the production of oil will be, or I will say, will not be balanced very soon because of the capacities of the demand. We will see how long the demand destruction actually will last, but definitely I don't see oil going much lower because of the couple of geopolitical issues and also a couple of production problems. So I do see this just as a correction, and I think that in future oil will continue higher. So if we look these higher time frames, this chart has been pretty clear from the perspective of the Elliott Wave methodology. So I will go on the line chart to show you. This is chart from 1962 almost, so it goes almost 2 centuries, even more. So if you look the wave count, you will see clearly that the 5-wave move is definitely unfolding here. So there was a wave 1 on the upside, wave 2, and then we see a nice subdivisions in a wave 3, which clearly has a 5 waves in it. We have seen 2008, 2020 correction on the downside, and then a further developments in this 5th wave, which will be the pretty much final wave for the oil price for a considerable time, because I think after this cycle is done, we will go down back to 10, 15, and even lower in oil price. So I do see this as a last move on the upside, which is, I think, going to finish on a pretty sizable new highs. So this is still, of course, to be seen. I don't think this is the end of this move. I just expect correction and then a continuation on the upside in the next couple of years. So let's switch to nat gas, which has reacted pretty nicely from our warning and our fib levels a couple of months ago. We have identified these levels much in advance. So from these lows, we do see clearly a 5-wave development in the wave 3, intermediary wave 3. I do expect some type of a consolidation. Also, seasonality kicks in. Nobody spends that much gas as a heating or as a cooking in summer. Everybody's on holidays. And also, gas is obviously less used. As you can see, this is a Henry Hub futures. So I do see some type of a wave formation, and after September, October, November, I think seasonality and winter will kick in, where I see depends where this wave 4 ends. Are we going to see some type of a triangle or a complex correction? This is left to be seen, but I definitely don't think that this is the high for the gas prices. After this seasonal correction is actually over, I think the gas will continue upside towards from 11 to 14. Depends how this wave 4 unfolds. If we have a triangle, of course, this will be a sideways consolidation, which will stay capped in a certain range, and that from that range, we're going to break out on the upside, potentially October, November, up to March. We can see the developments of this 5th wave on the upside, which will bring prices of gas pretty higher if we look this Elliott Wave script. Which has been serving us pretty nicely so far. So let's look just a little bit of a copper, which is also responding as an economic barometer. I do see a potential flat here, so we might see a little bit more back and forth until this copper makes a potential high. This might be potentially a flat, which means we have a 3 waves down, some type of a 3 waves up, and then a 5 waves down, which will take some time to actually unfold. Copper is a pretty good barometer of the economic conditions, and as you can see, the demand destruction, which is clearly present due to higher inflation and also central banks moving rates on the upside. Copper is reacting to the downside, and I think this will not be a long affair, as I don't expect also Aussie dollar, which is one of the pairs which I see going relatively higher in a couple of weeks. I think this will be just a corrective pullback before we see a higher prices on copper. So we by this complete the macro picture developments segment. We're going to switch to cryptos now. We're going to start with total crypto market cap, which has been pretty sideways, I mean, this is not a development which we can characterize as something of a potential higher probability low event. I mean, lower, I will say bottom forming event to shorten the expression. But definitely it is good that we are starting to form some type of a base around this weekly 200 moving average. RSI is pretty low, historically low on a total crypto market cap. Some altcoins, which I consider blue chip, are pretty cheap. So I definitely think from several things that I include in my analysis that we are forming some type of a low here in total crypto market cap, and that the next move on the upside will be actually a 5th wave. So I do consider this still as a 1-2, up in 3, down in 4, and up in 5. As you know, we have been warning a couple of times in the last year and a half that these highs most likely are a fake, especially this one in November. That was a nice bull trap, and then we dropped pretty heavily higher from 3.2 almost 3.1 trillion back to below 1 trillion, which was pretty, I will say, disastrous for many crypto companies and also crypto holders. So obviously we are witnessing a purge of a margin, accumulated margin in crypto space trading, which has been purged so far pretty significantly if you look the on-chain analysis. But nevertheless, even with that event, I think that this might be a last capitulation, and that we might spend some time forming some basing process, some lows, from where in a couple of weeks or a month or two we can see some impulsive advance, which will actually signify that this was a fourth wave low and a continuation on the upside. So the similar picture we can see also in a Bitcoin. So longer term chart, we are also historically at the low in the RSI. This 200 moving average has been keeping from 2014 the Bitcoin price pretty capped with a small overlaps on the downside. This I think happened as well here. So if we include this technical data, looking the 200 moving average and the RSI, there is also a couple of channeling technique we can use where I think we can find this pretty nicely leveled up with this wave 2 channel line, which is also one of the significant things. Although a secondary one, we also do look time ratio between time spent in a wave 2 and a wave 4, and this is completely in alignment, and actually it is allowed from the right look perspective guideline that we spend so much time in the wave 4. We also have a couple of very important fib ratios, which I said the last time. I'm going to make a webinar, which is going to be in the same time a course. In a few weeks it's going to be rolled out, so if you want to learn more about the Fibonacci ratios from the different perspective and the measured moves, I will explain that from all of the angles. So there is a 38% retracement here from the wave 2. There is a couple of internal ratios from this correction. So all of that actually is focused between the 20 and 23K. I consider a move down to 70K just a forward blitz, a kind of overlap that we have seen a couple of times just to clear up the levels on the downside. The wave count invalidation from the Elliott Wave perspective comes around 13,826. We are trading around 20 and a half. And we do consider this as a potential basing process. What is very important, as it was happening here and a couple of times in history, we do think that significantly a good thing will, if we close up a couple of weeks above this 200 moving average. As you can see, we are trying for a couple of weeks to penetrate it on the upside, so far unsuccessfully, but a very good sign for a Bitcoin price action will be a consolidation of these candles above this 200 weekly moving average, which will be just a basing process, we think, before we start embarking on a new uptrend on the upside. Price targets on the uptrend on the upside we will do later. This consolidation process might take some time, and then we expect in line also with approximation of the halving cycle, we might expect continuing of this uptrend on the upside, which was our thesis basically from these highs here in March of 2021, where we flagged that potentially cryptos are going to go lower either in triangle or in WXY, which actually has happened. So our view now is that we are in the process of forming a base, and that eventually very soon we're going to trade above this 200 moving average, and we're going to continue in some formation, which is left to be seen further on the upside. So we're going to stay bullish on Bitcoin. Actually, with our clients, we are long. So our position currently, we put a small longs controlling risk pretty much, because we do care and we pay attention pretty much on the risk when we take a swing trade. So our entry was on Bitcoin at 19,500. We entered, I think, last week with stops below this 786, which is at 18,300. So we have a specific risk ratios which we use. So this is a tier 4 trade, which means a minimum risk. So I do still think that this is some type of an ABC movement on the downside in a flat, and that this basing process will actually result in a higher prices. This can be 1-2 with the leading diagonal in 1, but I need to see this price on the upside in the next couple of days starting to go vertically on the upside. Otherwise, this might be just another correction with a move lower. Okay, what we are going to do in a trade management, most likely, if I don't see this develops further on the upside, we're going to move stops on this smaller risk at 19K, and if the trade is stopped out, that's fine. I think it was a good reward risk ratio to try this trade, because the ratio of the risk is on the downside is relatively small if you compare if we develop impulsive move on the upside. The question is how the big probability of that event is. For now, it is going good, so I don't like much that we don't see a drastically move on the upside, which we will characterize as a wave 3 on the upside. But I will give it a couple of more days for potentially to happen. In that case, of course, we will follow the pattern of what we're going to do at equality or a measured move. And then if we pass that, we will be almost certain that this is an impulsive move on the upside towards 28-30K. So this is still have to be seen. Usually when you have this type of a consolidation, you cannot be pretty much sure. You have to rely on your previous assessments because nothing here is still telling us except a couple of relatively subjective, of my opinion, in this phase. I'm just emphasizing this because of possible comments in this phase, that the picture is relatively blurred, and it is blurred. So I've based my trade on the potential accuracy of my previous assessments, which I have shown you on the larger time frame. And so far we are confirming that, but I will need more on the upside to be completely sure that actually this was a proper observation. So let's see Ethereum next, and a couple of other charts, and then we will switch to your comments and requests. So Ether is basically trying to do the same. I do potentially see this as a potential five-way move down in flat, and then we are maybe some type of a leading diagonal. This is still to be proved. We need to see a huge move on the upside in a wave 3, 4, and 5 to actually conclude and actually escape this sideways consolidation, which can be pretty much anything. It can be also a triangle. So I think in this stage, any observation is relatively subjective from the Elliott perspective until we see a clear breakout from this range. This also can be a triangle, and we can finish lower. It is very ungrateful to put any analysis out there in this stage. I will say that we do need still some type of a confirming size of a breakout for a potential clarity to actually label this as an impulsive move on the upside. That clarity for now is missing. We don't have that. As I said, particularly with our members, I have took this trade with a relatively very small risk based on a former assessment in the Bitcoin. We are actually didn't took a trade on Ether on a Bitcoin, but it's basically the same thing. We do consider this to be some type of a wave 4, 200 moving average. I'm going to show you the whole picture on Ether. It's also there. Many other things on Ether are there. if respected, this will be a fourth wave lows. As you can see here, wave counting validation is pretty low at 366. So it is definitely not worth it to wait. The wave counting validation in trade doesn't work. You have to fish a little bit and await also Ether to go above this 200 moving average, make some pacing process, and then finally confirm the move on the upside in 5 waves. After a pullback, I think this will be the next upside move further in the higher, and it will result in higher prices in Ether so far. So for now, this consolidation has been going good. Still not a guarantee that this can test this bottom again. So we are still, you have to understand, in the early phases of a potential pacing process in Ether as well. So if we look a couple of other charts, if we look, for example, ADA, ADA is also, I have that on a Binance feed because I do track larger time frames. Again, I forgot gold and silver, just accidentally. So let me go quickly over that. So gold has been actually moving towards our bias scenario. I was, as you know, pretty much unsure that the gold move on the upside will be actually sustainable from here. We didn't get a confirmation. We actually break support level and we break the wave 2 in this bullish scenario. So we are switching to our preferred scenario, which was mentioned many times in the last couple of weeks. So I do think that gold is going to continue lower. As you can see, we are looking for a couple of ratios down there in the line of 1,672 to 1,600. That will also pair up with the US dollar or dollar index highs. So we do think that this was just a consolidation and that we are going to continue higher. Nevertheless, the same thing stays. We're going to expect 5 waves up and a pullback, so we can increase probability gold is going to start to move towards and above 2000. So the same thing for silver. We will pretty bearish silver after this move on the upside, which we warned most likely is a fake move, because we didn't see a 5 waves on the upside. We broke this 400 support, which I clearly talked the last crypto lab, that this consolidation usually implies a move lower, and there you have it. We broke also 200 moving average on weekly. So in that respect, I think either here or a little bit lower, we might see some pacing process on silver forming an actual impulsive move, which will add to the thesis that the gold and silver will continue on the upside in the next phase. Of course, this can last a month or two until this pacing process is done. So let me just transgress quickly. So I apologize that I usually forget gold and silver, so I don't know why, but obviously because I'm going through many things, so I apologize for that. Okay, so let me show ADA and a couple of other cryptos, and then we can switch to your comments. So ADA, either if you take this as a wave 4 or if you take this as a wave 2, it really doesn't matter, because the context of the chart, if you count this as a 5 waves up, the next move should be on the upside. So equality of these two legs on the downside comes around 0.3841. Did we make here a failed fifth, which also can happen? Sometimes when you have a prolonged downtrend, the last sequence will not actually print a new low, which can be the case here in ADA. Okay, so we might be in some type of 1, 2, 3, 4, and 5. We might also go a little bit lower, but this will be my best case support levels around this equality ratio. The same thing also goes for Polkadot, which actually came to our target. We have been pretty bearish Polkadot all the time with our members. So we came to the equality ratio. We didn't reach it still. So I will leave the possibility we drop just a touch lower, or if I see impulsive move on the upside, this will be also some type of a failed fifth, because I don't think we reached the new bottom here No, we didn't. So this can also happen. You can see that in Elliott Wave methodology. The failed fifths happens, especially when you look daily and when you see this prolonged downtrend, which has been lasting from almost November 2021, when the Bitcoin printed a new high. So from 54, almost 55, we went down to almost 633. So pretty sizable move on the downside, and a failed fifth will be something which might correspond to this longer, almost incredible percentage lost in price. So that's it, guys, from me. I think I have displayed a lot of material in the macro event. So just to be clear, from the macro perspective, because I was emphasizing from the March 2021, pounding the drums that the macro perspective is pretty much very important in cryptos, because cryptos are, especially Bitcoin, does not behave for now either as a store of value or as a pristine collateral or as inflation hedge, at least for now. We are in the adoption process progressed on the upside, but Bitcoin is still not used so much as its original purpose in a white paper, which means as a decentralized currency. We are seeing more of that, of course, but we have slowed down. In that respect, instead of that, we have seen a lot of leveraged, purged trading. A couple of companies collapses. So this might be also the secondary collapse phase when we purged leverage and a couple of companies out of the system, and then maybe the cryptos will continue higher. So the macro environment maybe starts to look a little bit better with this inflationary outlook lower. We will see what the Fed will do, but still this is not ideal if you consider the correlation of the Bitcoin with the SMH and basically behaves as a high beta risk assets. We cannot consider this environment as ideal, never, much less than ideal, I will say. But if we look also the on-chain data, many of the holders has been accumulated. Also, many of the holders has been purged. So we have seen the transfers of the Bitcoin. There has been some buyers around 65, 67, which has actually got out around 17K, which is of course a disastrous loss. So that Bitcoins find their buyers at 70K. So I don't think there is much left in the system to be sold. So I do hope we're going to embark in some basing process. And as the time goes by, I think conditions potentially might change with some regulations even, or something in the Fed perspective or on inflation narrative. So thank you guys to bear with me. This was a pretty extensive 50-minute presentation, so I will take a couple of minutes to look of your requests. Nicola, yes, I look volume on a higher time frames. Depends what do you look. I usually, when I look volume, I look on the overall capitulation on the bigger time frames. I don't look volume on a smaller time frames because I don't trade smaller time frames, simply. It might be a significant indicator, in my opinion, especially if you are kind of a bias to look higher time frames only in the liquidation events. Of course, you want to see a volume pick up after significant lows when the volume has been drawn out and actually purged everything on the spike lower or higher, depends how do you look the chart of volume. But in this case, the volume spiked higher when we had lows. So now it needs time to recover so we can pick up in volume on the upside if we do so. So in that case, as a secondary indicator, I will say it has its place, definitely. Yes, in this Fibonacci course, we'll actually have extensions, it will have projections and retracements and also combinations to form the Fibonacci clusters. It will be focused on a measured move and time ratios as well. So this will be a paid webinar and a paid course, so it's not going to be expensive. We will set the price, I think, in a week or two, and I will tell you publicly, of course. So if anybody is interested to either be live on that webinar or purchase it on Trading Analysis website, it will be available for you to do so. So first event will be live, maybe 1 hour, hour and a half, and I will go deep in Fib levels, history of Fibonacci, and how do we use it. In most cases, very successfully to determine either longer-term targets or shorter-term targets, or where we should go out, or where we should actually pay attention. So Fibonacci ratios in Elliott Wave methodology plays a very and one of the crucial things also for orientation with the wave counts as well. Okay, so there is not much of a request, guys. So we will look a couple of more cryptos and then we will conclude this session. So let's see, Rune or Torchain, what's going on there? Yeah, so I still do see this as a wave 4. As you can see, we have looked this as a triangle for a potential move on the upside. Triangle was broken. So we do also looked for support here at 38%, which is actually varied. So it means that I didn't look Torchain for a long time, because from these highs, we had two possibilities. We narrowed actually the two possibilities. One was the triangle, and one was the complex correction. So I do think potentially this is the end of the wave 4, and then actually that we might, that this correction is actually done, and that we might actually see some impulsive confirmation for the next move on the upside. So it doesn't look bad. RSI is also historically low, so it should be, of course, observed for the impulsive move on the upside. So Matic is one of also my favorites projects. So I do see Matic forming a potential impulsive move. Still not much of a clarity there, but on a weekly time frame, we do see this as a potential wave 4 in the intermediary impulse on the upside. So we identified this as a 1, 2, up in 3, down in 4, up in 5. There has been some objectives to this wave count. Some of the Elliottians would rather anchor a wave 3 here. That's not wrong. You can say that this is some type of an ending diagonal, and then you can mark a wave 5 here and actually consider this to be a primary trend. But there is nothing wrong in the observation, because either from the intermediary or from the primary view, still you're going to have one more move on the upside in the 5th wave. So basically, it's the same. So that's why I say always don't look so much at the, from the different higher or lower time frames. If you have both things which are potentially showing the upside move, that context is much more important than if this is a WXY or a triangle or whatever. So I see people looking, as we say in Serbia, hair in the egg. But focus on context. You will capture much more juice in your potential trades than if you discuss if this is this, if this is that in the corrective process. So what is important is that the Fibonacci cluster, the overall outlook, and if you have the RSI down there and potentially wave 4 from here or wave from all of here in some type of a flat or WXY, the lows are the same. So same outcome. I think we need a little bit more upside to prove 5 waves up, and then a correction. I think it's going to be first sign that Matic is ready to go up to close to 4, 5, or even higher targets on the upside. Okay, guys, so let's look one more and let's conclude this session. So there is a link with our members. If you want to check us out, of course, you can go and visit and take a trial of our crypto service. We have been almost, I think, soon it will be 5 years. My God, it passed so fast. I started to run cryptos trading analysis around half of the 2017, and basically our track record is pretty nice on nailing highs and lows on the higher time frames on Bitcoin. So if you want to join us, we also do a swing trading, as I explained. So if you want to join us, check us out. Trading analysis website is the place. If you don't, of course, you can join Crypto Lab every Thursday. So click a like or a subscribe button so that we can grow in popularity, which is obviously lacking for the last year and a half. But nevertheless, I'm glad that our analysis was pretty much objective and that our perspective was pretty much spot on many things we mentioned. So if we succeed in actually purging the hype of the different other different crypto observations, I'm glad. Okay, so Link, we do think that Link is in fourth wave, so I will just make the chart bigger. We don't have for now any signs that we are closing that we are actually invalidating the fourth wave count because it's far lower, around 1.60. So we do count this, although this wave count is pretty difficult. As you can see, so from the beginning we have a wave 1 and 2, and then the intermediary wave 3 was met by a pretty tricky wave count. In a wave 3-4 almost invalidated this wave 1 for a small touch. The RSI is also at the historic low, and we can count 5 waves up, and this is a correction. So ABCX, leading diagonal in A, up in B, down in C. We are trading below 200 moving average, which is not good, but I hope that we can, if our thesis is correct, we can form some impulsive move up, which will actually finish above this 200 moving average, which will give us another juice to consider this as a potential new upside developments on Link. So we still need to be patient. There is some type of a basing process formation, but it's still very weak basing process. So I will need to see more on the upside from Link to become more certain that actually we're going to continue further on the upside. So far on Link, we are keeping our powder dry until we see a confirmation. Okay, guys, so thank you very much for your patience. Nicola is asking Bell USD. Okay, so Nicola is saying that since he's from Serbia, or from this region, that I have to do it. Okay, I agree. So let's do it for you, Nicola. It is Bell USD, so a little bit of a protection. Okay, we can live with that. I don't think I ever saw that chart, and it is particularly ugly chart. I must say. Let me see on this other feed. Do we have some bigger picture, or this is all? So give me just a second. If I can see, nope. I don't see it here. Definitely it's not belt USD. So we will have to use this chart on a trading view. Not particularly a rich chart, I would say. So if this is all that we have from data, let's switch on a daily. Usually when you operate with such a small amount of data, you need some bigger confirmations. This is definitely not impulsive on the downside, but still not impulsive on the upside. Okay, so what we see here is definitely some type of a 3 waves down, and then we see a 5 waves up and a small pullback. So based on this, disregarding all of the happenings before, what will be actually necessary for this to become relatively impulsive is that we develop some type of a 5-way move. I need to switch on a 4-hour chart to look this more inside to see what we did see here. Yeah, potentially 5 waves up are done. So we are in some type of either in completed wave 2 or a little bit more on the downside. So what is important for this one, of course, it is that we consider a measured move as a first target. So that I will explain a lot in the mentioned Fibonacci course. So usually when we are faced with this situation and we want to see how the things potentially might expand on the upside, we want to see equality. So that's usually what we call a measured move. So for that we use a specific ratio, and for that ratio we actually need to see some targets around, let's say, around 8.9 actually to confirm a measured move completion, and then if we go further we will actually confirm development of the full impulsive wave. So if we consider this as a 5-wave move, after this correction I think at least we're going to go and test these highs here, which comes around 3.37. Of course we need to see on smaller time frames some type of developments which will quantify this as a larger probability. For now, we are just trading some sideways with the possibility with a little bit more lower levels, because from highs we see 5 waves down, 3-wave pullback. So this might be some type of a ending diagonal, small ending diagonal in C wave, or a small triangle with a small push on the downside, which might actually complete down around this 0.66, 0.6 level before we start to go higher. I hope you are satisfied, Nicola. So thank you guys on the attention, and yeah, I definitely think that Matic will go up as Bitcoin and Ether proves potential bottom and continue the further upside. Okay, if we see some major news in Matic, some collaboration, but as I said, the macro environment is not so bright currently. So I think in crypto space we can be happy that we are seeing some potential attempt of the pacing process. So according to the charts we tracked. Okay, guys. So thank you very much on the attention. So check the trading analysis. If don't, visit us on the next Thursday. So I will probably head off to some vacation, but I will not stop Crypto Labs. I will probably, it's going to be a workable vacation with a smaller amount of updates, but I will try to keep the Crypto Lab open, and I will announce you in advance when this will happen. But anyhow, next Thursday Crypto Lab is on, so like the contact, subscribe, and see you next week, guys. Bye bye.